Hey,
And we're
Matt.
live.
Good morning.
Good morning. Hey, good morning.
Man. Yeah, thank you guys all for kind of dealing with the schedule change here. We just had a lot of meetings last week and subsequent happy hours. And so we felt like we said most of what we wanted to say to you all and wanted to take a slight break. But thanks for joining us here on Monday. And I know this is kind of like we're getting close to the start of the holiday season here, and it feels like there's a lot of Christmas party talk in the air and whatnot. So wanted to keep kind of providing information and staying on top of what the big topics are in real estate and give some thought leadership to it. So Matt, I know there's a lot going on. There's been a lot going on, and I know there's a lot of different kind of sentiment in the market. There's different hopes and fears right now, and there's just news that keeps coming out that seems to attack a little bit more of like the hopefulness. But I think what I love about what we're trying to do is let's stay real here. Let's really understand what's going on. Let's really understand what the news is saying and what it's alluding to. And then let's, as real estate professionals, do the best we can to help people navigate through it really well, make the right real estate decisions, and really foster a trust with customers right now. And so that's kind of been our main message, I think, for the most part, and it doesn't change as the news gets worse or better. We really just want to stay on top of what it is and be sophisticated experts. So there has been quite a lot of news about this recent kind of settlement. I know Anywhere has already settled, right, for 83 million or so. Or there's 83.5 million.
Yeah.
And then Remax recently came out and settled also for 55 million. And so we touched on this a little bit on our in our meetings last week, but really wanted to delve into what does this mean potentially, and kind of try to be a little bit more balanced in our thinking of it. So there's not a lot of fear and worry out there, but also some reality in terms of which way the market seems to be going. And so,
right.
So yeah.
Yeah, no, I think the settlements are something that a lot of people look at as wanting to just get it behind us, so it doesn't stay out there in the news cycle of these antitrust type discussions around real estate. And when it comes to the cooperation policy between listing brokerages and buyers side brokerages, I think that everybody would agree that that setup is ideal for having two sides have their own representation, right? Any type of broker deal, it's typically, if I was going to go sell a company and have an investment banker on my side, the buying company would be better suited to also have their own investment banker on their side and legal teams to negotiate the deal, because it usually ends up favoring both sides, or else it wouldn't exist in that type of sophisticated deal when you're talking about billion-dollar transactions. When you have so the idea that you don't need representation on both sides of any significant transaction, which I think we agree a home sale is, I think that most people, being intellectually honest, will say yes, you need someone on both sides. It's a better structure. But what's happening with this is that they're saying that the seller should not have to pay the buyer's agent's commission, and that so therefore should the buyer have to then pay their own representative. And I think that it's always kind of been mixed in there, because the real estate industry, because single or owning your own home is such an important part of our society, that we've structured a lot of things in an austerity type of way, meaning even a 30-year mortgage could be argued that it's to stimulate home ownership versus like being able to have to just buy it cash, right? Like if you had to just buy a home cash, well, most people wouldn't be able to do that, right? So it'd favor people with wealthier, more cash, right? So the whole idea is that the real estate industry in America has been set up to benefit the average person to be able to make good decisions around real estate and to own a piece of. So I think that to pick and choose how we stimulate that is not taking a holistic picture. So my thought is just the fact that I hope that the wiser people in the room prevail in this, and that it doesn't really change much. but I think we're just having to go through this. So I think the sooner we get these things behind us and then let our own industry figure out the best way forward for the people we serve, the better we'll be. But that goes to the idea of who are the people in our industry who are really thinking about these things in a sophisticated way, rather than sometimes some of the larger voices in our industry as realtors don't come off necessarily as the most, you know, not really sophisticated, but just the most like looking out for the consumer in a very stewarding way of taking care of people versus kind of like in a sales way, right? So I think that's where, for our industry to stay in control of our own destiny, I think we need to make sure that the agents who really care about our industry and have that bigger picture stay in leadership, get involved, make sure that we're, trying to, guard what we know is the best model for the consumer, because we are the ones that work in it. We know better how things work, so that's what I'm thinking. So I'm hoping that's where we're able to get to through this process, but there's going to be some shakeup, and there are people who want to attack sort of the MLS idea. I've seen comments in some of these articles where people are saying, yeah, the MLS is antiquated, we need to get rid of it. And then what happens then? What would happen then to our industry if we didn't have that cooperating agreement between brokerages working to serve our customers in a cooperative way? I don't know. That would be so.
Yeah,
that's where we are.
On one side, it looks like it is kind of. I mean, the opinion is that NAR and the Association of Realtors is somewhat a monopoly, and because we're all agreeing, we can dictate these rules and whatnot. Not that they were meant for bad; they were meant for probably the best. Like, it was the best way to really help buyers and sellers on both sides with some really outlined rules, so that there's clear kind of definition of how that relationship works out. But let me ask you, the elephant in the room: does this mean that then buyers agents maybe end up making zero, or buyers agents altogether are not going to be around anymore? Because I think that's probably the question that some of the more scared people have.
I think that, ironically, I think the more sophisticated the buyer and seller, the more they're going to want to have their own representation to some extent, even though you think it's the other way around, that if, hey, I know what I'm doing, just let me go in there. But I think that people who are busy, who are professionals themselves, or own businesses themselves, like to have representation that's on their side. They just like to have that, right? Whatever they're going into, they just want to have someone on their side. So I think there's going to be that. I think that's going to, but I do think that, and how will it get paid, I think can be worked out with agents who know how to communicate with each other and can have discussions that, are not a, I'm trying to get one over on you way, but like, hey, let's work cooperatively. Let's get this to where everybody's happy and it's all above board. It's all very disclosed to everybody. I think that can happen, right? But I do think that there can be agents who get stuck where they have a client wanting to see a house because they saw it on Zillow and they don't have a buyer broker agreement. They've just been showing houses. They show up to the house, they show it, they want to buy it. And now the listing agent's not offering commission, and they're going to have that awkward conversation with their clients. So I think the people who are unprepared and aren't thinking through this or unable to navigate that are going to be in trouble. That's why I've been pushing the buyer broker agreement, and not just a buyer broker agreement, but a whole consultative process as a buyer's agent. If you want to work with buyers, to really be able to articulate the value you have as an agent and to explain how the benefits of them having an agent on their side when they're buying. I mean, I think that those agents should be fine. I do think that the like you and I talked about, the ultimate hedge against what can happen is just to get listings, right? So having listings, but I do think that also, we all know how terrible it is to double end a listing with people who are difficult clients. And so you're not going to necessarily have a choice in the matter of if that becomes a model where you're, you're double ending a lot of listings, it's going to cause a lot of potential, stress and legal threats and things like that to a lot of agents who aren't ready for that either. I've noticed an uptick in double ending transactions even now, just because of low inventory. And I see also a lot of, stress that cause. So so to answer your question, I think, I don't know if it's going to go to as far as where we just go to where, listing agents only, and there's no MLS, and basically it's like whoever has the inventory. Like it's like a used car lot, right? Like if you want this type of car, you got to go to that used car lot. That's the one that has that car, and that's we're used home salespeople, right? And there's no cooperation. You got to go to that lot. You got to go to that agent. You got to deal with who is representing it. I just think we all know that would be a terrible world to live in real estate wise. So I think it's a better model. And I think hopefully we'll just all work together to figure out a better way of doing it. Maybe that consumers feel it's transparent. They understand what's going on, but that we don't go to that model. I don't hope not. That's not where we're going.
Yeah. I think it's well said. And it's funny how free markets have a way of valuing to true value, right? So if you're a buyer's agent that really does give a lot of value to their clients, chances are you're going to be okay, I think, right? Because what you do is more than just opening doors or setting appointments to go look at properties for people. Right. Clients look to you to help make really the decisions sometimes, right? And they need some real expert advice to be able to make those decisions, and they rely on that, right? And then, like you were saying, Matt, if again, maybe people who are not as sophisticated in that sense, right, don't have a sophisticated view of what real estate is and what it can mean for the long future, both positive and negative, right? That they may not value that so much until they come into a situation where they said, "Oh man, we should have worked with an agent that was working with us, right, on our side." I've experienced this a lot in my career, working with buyers and at some, 13 years ago, being a pretty new agent, not knowing all the things that go into real estate, or not having the body of deals and transactions to look at to know things that can go wrong. And now as a broker too, having gone through some harder issues, right, on deals, like even a year, 2, 3 years after they closed. For instance, we had one pretty recently that the roof with the rains recently just did not hold up, and it was a brand new home built in 2019, and so the whole roof was basically leaking, and I think my client, if they didn't know any better, they would have thought, hey, I just have to take this all on by myself, versus knowing that, hey, there's a statute of limitations for builders here. They have up to 10 years where they're still on the hook. And so we can go back to the builder on something like this and get them to cover it, right? And they did. But I can only imagine, the tens of thousands of dollars that would have been spent if, let's say my client didn't have someone that didn't tell him about that, right?
Right.
And so that's just like one small example. There's so many examples of ways real estate can go bad, and you don't know until you face it. And then you need someone, or dang, we should have done that. Hey, we should have done our inspections, or whatnot. And so yeah. But all to say, I do think really, if you're a person or an agent that's giving real value, the market will give you value in that sense, and buyers will give you value and pay. You're right, or factor that into the price of the overall deal and whatnot.
Right.
So not too worried, but also curious to see how this kind of plays out, right? And you and I have talked about this. The NAR is a very big organization, right? And they're working on behalf of real estate agents, throughout the country, and really trying to help agents stay protected and almost like a big union, right? So you're curious at the end of all this, like who's behind this class action lawsuit? Right. What are they trying to get at? And I think you and I have talked about it, and we're not sure yet, right? We're not sure. Is it the platforms, that look to benefit from something like this, or whatnot? And so we can get really creative and have all kinds of conspiracy theories and have fun discussion around it. But I think in the end, what you and I have come to a lot is just focus on giving true value.
Yeah. And hopefully what it is just that there were some lawyers who saw that NAR was such a large organization, and that saw that some of these brokerages, Remax, Anywhere, were very big pockets, and they decided, hey, this is a great opportunity to, shake them down for some money, right? Like that might be, and saw a good legal standing, because real estate has been this insulated kind of special industry that's not any other quite like it, that's been set up to, again, help people financially participate in this country in a significant way by owning property. That maybe there were some things that wouldn't be cool in other industries, but it makes sense in ours, right? Like, to kind of, like, it's almost like we were doing things that maybe that it's best for them, but it may not like be as pro normal competition as other industries want to be, right? But it's set up to be cooperative, right? But you saw like that company Rex come in and try to sue people, and they were trying to be off market listings, and it didn't ultimately benefit their customers to have to be listed there, because they weren't getting out to everywhere. But the MLS puts listings out everywhere. It's not like we keep it to ourselves, and it's not, so anyhow, I don't want to get too much into that, but the point is, I don't think it's as anti-competitive as people make it out to be, unless you just wanted to set up your own shop and compete. Then, well, you can try, and there's nothing wrong with that. It just doesn't work.
Right.
Yeah. But yeah, I think the outcome of this, I mean, to hedge against it, I think the best thing you do right now would be to just start a buyer broker process. So that way, in the short term, as agents stop cooperatively offering out commissions, that you don't get caught surprised that way, and that you don't feel like you're not servicing your customers well by having to get in the way of their ability to purchase by trying to negotiate for yourself. And then I guess the next would be, I mean, you always want to have listings. So I would say, I don't think we've ever given advice to agents not to get listings. I think that maybe some of the people that are more at risk are people that are very buyer dependent. Like, I've seen agents that have huge production, and then when I look at their production, it's almost all buyers, because they've been working with Zillow. And that's their model, is just to get buyers off of Zillow or any other buyer. Maybe it's realtor.com, whatever it might be, but they've been primarily a buyer shop. And I think those, that may be more at risk of a business model to some degree. But yeah. So anyhow, I think that we'll keep everybody up to date. But I do think that in markets where there's less transactions and there's less financial firepower for everybody, that I think that's when disruptors can get a little more hold in the market, and things can change a little bit more, because everybody's hunkering down a little bit. And I think that we'll see what happens, but we'll definitely keep this as a topic going forward to this. But any more thoughts on that before we move on to?
No, I think that's it. There's been times where, even in like a seller's market, let's say, you could see some homes, advertising a flat fee for a buyer co-op, right? Or no fee, or even the builders. When the market was hot, I remember, I'm not going to say specific names, but some builders didn't give any co-op to buyers agents, right? And I don't think it stopped buyers agents from showing it. Of course, people did the right thing, but it left kind of a sour taste in people's mouths, and that ebbs and flows, right? Like, it's a seller's market, then it becomes a buyer's market at some point. And like, at some point there's a reckoning, right? If you only gave out a flat fee, right, or no fee during a seller's market, and now it's a buyer's market, and now you're asking that same agent, who worked for nothing, to then, come bring your clients to our place and work extra hard to help them sell that. Like, it's kind of one of those things, right? It leaves a bad taste. And so I think this is going to play out to some degree, and there's going to be some instances where people are on one extreme and another, and hopefully after time just kind of equalizes, and there's a good equilibrium. Because I do think this is, like a fair market practice. I don't feel it's a monopoly per se, but it's a great way to set forth the rules and for everyone to have a chance to get representation. And I've been in listing appointments where the seller may say, hey, should we pay even more on the buyer side? Do I need to incentivize it even more to get my home sold quickly, or to get more attention on it? And so I think most sellers are relatively savvy in that sense, and they'll pay knowing that they're going to get that value back. And so again, not too worried, but very interested to see how this thing plays out, overall.
Yeah. Well, absolutely. And so I'll say one more thing just about that, is that, I've always said that buyers do pay the commissions in real estate, because it's a retail operation where I'm selling a home retail, I'm putting it on the market, I'm getting paid, but it's similar to any sort of retail sale where the buyer's paying, and then out of the buyer never pays. If you go to Nordstrom, you don't pay, give $50 to the salesperson, go tip the piano player $20. You're paying for that in the price of the clothes you're buying, but you don't pay them each directly. It's the same thing. You're paying for your agent, you're paying for the closing, but you're financing, it's going into the price, and then it distributes from there. It would be crazy to think otherwise, right? And so we know that buyers are paying the commissions. Now what they're saying is buyers have to pay it out of their pocket potentially if we take away this, where, if people don't do that. And I think that's just a silly idea. And, imagine a world where a listing agent knows that there's not going to be any exposure. No buyers it's only him that the person that's going to be representing this home. Imagine how much they can take advantage of any seller of like saying, hey, this is a great price, and here's my one buyer to you. And it's a great price to sell your house. There'd be so much bad behavior with that type of scenario where you don't let a real market speak. And so I think that's where, where it just won't work. So I have faith that this is going to prevail in the right way, but yeah, whatever little hiccups along the way might be frustrating for some of us. But that's why I said that get the buyer broker agreement. That'll take a lot of the thing out of there. So a lot of the issues, but anyway, okay. So what do we else? Recession home prices is a fun one.
It's a fun one.
Let me pull up. Yeah. Go ahead. Sorry. Go ahead.
No. Go ahead. I'll preface it by saying I think there's a lot of chatter when it comes to this. I know people are aware that there's a lot of people on Instagram, maybe even some of us, who have posted things that say that, hey, in recessions, prices don't go down, right? And
let me put this up. This is from,
yeah.
This is something people shared a lot.
Right. And it's like one of those things. It's kind of like a wordplay. It's like, recession doesn't cause prices to go down directly, let's say. And so you can kind of say that with some grounding. And now, that same logic is carrying into this market we're in right now, right? And so again, wanted to put it on the table so we could talk about it and have like a balanced thought kind of on it, so that what we say right now doesn't age poorly, right, on our social media or just even in conversations with our clients, right? So yeah.
Yeah, no, and I look at this and I just look at predictive and I mean, I took one probability statistics class in college, but what I do know is that it's like, if you're going to make a big bet, I look at it, I would bet my whole net worth that the sun's going to come up tomorrow, right? Because it's come up for, as long as we can remember, right? But if there's just one day that it had in the past, maybe I wouldn't bet everything I had on it, right? And so the point is that you've got, if it said 6 out of the last 6 recessions, similar to the yield curve saying that, 8 out of the last 8 recessions, the yield curve has predicted, just a little more predictive. And I just think it's like, and especially if you look at this, the one time that it didn't, that it did prices go down in a significant way, it was pretty significant. And I think that the whole point is, I think recession and home prices don't have much of a correlation. I think, recession is basically quarters in a row of not having, what do you call it? Growth, right? No GDP growth for a certain amount of quarters, right? Negative growth for 3 quarters or in a row, right? Is it 2 or 3 quarters? I always forget. I think it's 3 quarters, right? Where they consider a recession. So that and home prices don't necessarily have to be correlated, because that's just our actual economy as far as businesses and things like that are growing. Doesn't necessarily have to do with the personal finances of everybody. But when the personal finances are affected by whatever else is going on in a macro way, then I think home prices can be affected, right? And so I just think that we don't even talk about recession when it comes to home prices. We can look at other things and know, because what we think the recession is going to happen this time, take out the word recession, I think that the Fed's going to raise interest rates until companies start laying people off, because growth is so restricted by they can't borrow money for things. So when things get tight in a company, they can't go borrow money. And so they're going to have to cut costs. And so that's what's going to, and that's what the Fed knows. The Fed knows if people can't borrow money, it's too expensive to borrow money, then they have to cut costs when there's dips in their business, dips in their industry. And so that's why I feel like if there's a lot of job loss this time, because again, not all recessions have been caused by interest rates being raised like this, right? So there's dynamics now that aren't in every recession. So I think that's what people have to understand, is like thinking about it a little more comprehensively, that right now we know that the Fed is going to continue to keep rates high until something gives in jobs. And it's sort of a common sense thing of saying, if a lot of jobs are lost, then a lot of people are going to have to make decisions of either, selling homes and maybe not buying homes, and that can tilt the supply demand thing to where prices, again, no one's calling for a market crash. I just think that prices might come down. And I think I have to say this just real quick before we get into this conversation. I want to say this disclaimer, is that we are not, this is not about what we should be saying to real estate agents. Real estate agents, we're going to be at that 4 million homes sold no matter what type of way for the next year, maybe 2 years. We don't know how long, but you can count on things being pretty steady for realtor income, because people always sell at least 4 million homes a year nationally because of different circumstances that come up. And so what I'm more speaking to is how we need to counsel our clients as buyers and sellers of real estate and give them the real scoop, versus maybe giving them information that looks like we're just trying to convince them it's okay to buy or sell. And I don't think that's good advice. That would be like a doctor that wants to sell a certain drug, and no matter what the client's complaining or patient's complaining about, they go, it would be great for this drug, and it's, I think that's where we don't want to sound like, and I think we're too important to the American public as realtors to guide them through buying and selling of properties, to be not sophisticated in how we advise them and to do the right thing. So.
Right. Yeah. And I would echo that. And I think when you think of a client, and this is a real conversation that people are having, right? Is, hey, we've saved up X amount of dollars. We have essentially one investment bullet to shoot. We're thinking about right now buying an investment property, maybe in an Airbnb type location. And this is all the money we got. So we're putting it all into one basket. Do you recommend we do this? Right. I think I've had that conversation a couple of times. And I've had to say, hey, maybe not. If you were to tell me you want to buy 4 property because you have a good amount of funds saved up for this plus reserves, is it a good time to buy? I would say maybe, yeah. And the idea of dollar cost averaging into the market, even in this time, and buying, real estate as an investment, is not a terrible idea. But again, if you were to tell me, hey, I got one bullet, I need this to make money, I might need to sell this, like if times get rough, in the next year or two, and liquefy that equity, do you think I should do it? And I have to tell them, I'm not sure that that's the right move for you, right? And steer them towards something else that's a little bit more liquid, a little less prone to maybe even price corrections and whatnot. So yeah, that's why I think some of the noise I've heard on Instagram or social media, and even, again, some of my conversations with agents is, man, I hope prices don't come down. I really do. But I did live through, we lived through the 2006, 2007 rise and craziness. And then also saw like the downfall, 2008, 9, 10, right? And really what happened, and people going through foreclosures, short sales and all that. And so I wouldn't want some type of like sugary message out there to kind of forget about that most recent past and people losing their homes and going through really nasty processes to recover their credit and whatnot. So yeah.
I'm good.
Yeah.
No, I'm sorry. Go ahead.
Go ahead, Matt. Go ahead.
No. I was thinking about that 2006 time. I mean, I remember being furious that I had a client that I helped buy a house and got them a really good, a decent interest rate. They bought it probably 2006-ish, right when the market was at its top. And they had like a friend they grew up with that was like a mortgage person and seemed like he was a real sales, really pushing. And he ended up getting them into an adjustable rate mortgage because he told me he could save them all this money. And I remember talking to them going, don't do this. And I remember this guy was like a friend they grew up with, and And I was trying to advise them, just why do that? Because already we had started talking about how ridiculous the pick your payment type stuff was, where you can go negative amortization. It just seemed like, I was always a very positive, like, hey, let's buy a house. You should buy a house. So I was a realtor like everybody else. But when I saw some of these things, I thought, this just doesn't make sense, And
Yeah.
I remember being really upset when I heard they refinanced, because it was almost like I was like, well, hey, if you want to try to refinance, talk to my. And I remember talking to them and said they did, and I was just like, this is not good. And sure enough, like back in about 2014 or 15, they called me because they knew I was back, kind of in the business after I went in the tech world for a while, and they said, hey, we've been living in our house for like 2 years, but it's in foreclosure, but we've been living here like almost, but they finally had to sell it. And I just remember thinking, like, yeah, this is, they've been just on borrowed time, but the adjustability finally caught up to them, where it was just too much for them, right? And they couldn't refinance because of whatever reasons. Maybe they were still underwater in the house equity at that time. I can't remember exactly, but the point was that it wasn't something that people didn't know even then, when things were really good, that could happen. And I think that's where we all want to be on the right side of history and make sure that we're kind of saying the right things. And I get it. We're in an industry where we're sometimes here in an echo chamber, everybody's saying the same things. Like, I will say this, and I'm not saying anything's wrong with people who said these things, but there was recently we talked about this, the marry the home, date the rate type of thing. And that wasn't like people were bad for saying that. And there is something to say, like, hey, you know what, like, if you get in the home, and rates come down. But there's a good chance, we see now what they're predicting, that rates might not come down for at least another year. And so I don't know if people thought it was going to be that long term of dating, right? They might have thought it was going to be 6 months of dating or a year of dating. But it might be 2 years of dating, that rate. And I hope people can get through that, and that makes sense in their financial plans. And, I've just never wanted to give that advice to people, because I don't like to try to predict that they're going to be okay and just wait it out a year and you'll be fine, because that to me is hard to say. So, but I think people get caught in that, and it's just part of our industry. But I think it's, So I remember people have been to that market where maybe they felt a little bad about some things going on after the fact, when things really kind of hit home what was reality now. And I just don't want people to be put in that position again. Because I guarantee you my friends aren't going to go back to that friend they grew up with to go get a loan from him next time. You know what I mean?
Right.
That's not going to happen if they're even talking to him. I don't know if they're done. But, and maybe they don't hold it against them. Maybe they don't hold it against them. It was their decision. They did it. I don't know. I've never asked them about that. But maybe they listen to me next time.
Yeah. No, and what's crazy about that is I was in the mortgage making field at the time, and that option arm program, or the neg am program that we're talking about, there was so much incentive to sell that product. On the retail end, mortgage brokers were making something like 3%, 4% commissions by selling that mortgage product, because it was very lucrative for the banks, right?
Right.
And then on the back end, mortgage bankers that started to compile that type of loan and sell it to Wall Street. Wall Street had an appetite of another 4%, 4.5% on the back end for that type of loan, right? And so the incentives were super high for something like that. And unfortunately, the people got left holding that bag were the homeowners, right? Who thought, oh, this is okay for me, right? And were advised that way. And so I remember even back then feeling like a sense of like injustice for something like this, right? And then you hear about the bailouts happening, you feel even more like, oh man, are you serious? Like that, this again, it can't happen. And I do remember, just like your client, some very close friends, and even mentors that had gotten into that type of loan because they were so urgent just to get into a house, not miss like a window to be able to buy like this. That ended up again turning really poor, and still to this day, there's an element of that haunts me, right? And there's a part of me that says, hey, we shouldn't allow that to happen again, and especially those who have gone through that and kind of experienced that and seen not just the macro kind of wave, but really understood the stories of the homeowners that went through what they had to go through, and some heartbreaking stories of loss, right? And almost resetting their lives over, right? I remember I was on a plane on an American Airlines flight, and I was sitting next to a pretty elderly person in his like pilot uniform, So we just started talking, and I realized, hey, this was a retired pilot who now has come back to work, right? Because his entire 401k had been drained in that 2008, 2009 process, right? So
Mm-hmm.
the several hundreds of thousands of dollars that he had built up over like a 30-year career were now gone. And so he had nothing else to do but try to come back to work and at least, try to make income that way and take advantage of some of the perks that American Airlines still had for him as kind of a person working for the airline, right? And I know those stories were there were so many of those, and so it feels like this time around, facing what we're facing, we as people need to have like I guess a bigger kind of context in terms of what we're doing versus like how much is my commission going to get hurt, or man, like I need to sell. No, it's like we don't want to contribute to that type of negative story again, or people losing things again. We really want to be there, having lived through that to some degree, to help people not fall into that and make good choices, so that they don't get into a situation like that.
Right.
And so yeah, but it's very there are incentives obviously to make you sometimes like encourage that activity. And I kind of want to say to our agents and maybe the people listening, like just know that that is a very short term thing. And again, a lot of those mortgage brokers that I knew back in the day who were driving around in amazing, great cars, buying a property, they had to go through their own reset too, because they were very short sighted in that sense. So
Right. Yeah. It hurt them as well. Yeah. And that's,
yeah.
yeah, exactly. And that's the other thing for our agents too, is just to make sure they're not making those decisions. Um, yeah, I mean, and that's the thing too. People thought about like the subprime, right? That took down. And I think what it was, and subprime was bad because they were definitely lending to people that didn't have the income they said they had, right? Stated income, right? Or they lent to people who weren't credit worthy necessarily in the traditional sense, right? Like had bad credit, that type of thing. But I do think that there was a lot of people that were just, again, just trying to like live at a higher level than they should, right? Like meaning, like you're saying, it's like they had great credit, they were otherwise, very credit worthy people, they had income, but they were just still pushing themselves to the tilt of that, right? Like they were getting fully documented loans with, but they were getting loans that were not great loans. They were getting adjustable rate mortgages, and yeah, we don't have that now as much as before, but there's still people that are high debt to income ratios. There's still people that are pushing themselves as far as they can financially and get it. But either way, the point being is, I think it's like you were saying right now, the people who are driving the nice cars and that, if you went back and watched The Big Short right now as an agent or lender, and you felt like, hey, this feels a little bit like kind of similar things that are going on now, like, because it's like what history doesn't repeat, they say, but it rhymes type of thing, right? So it may not be all the exact same stuff, but it's kind of similar dynamic, where people are kind of
Right.
like, no, it can never go down. What are you talking about? Like, it can't go down like this, right? Like once people are saying that, that's where I feel, and that's what I felt like in 2006, 2007 was kind of my instinct was, I don't know, that sounds like impossible.
Totally. I
Yeah.
felt the same way because we were, again, these products in mortgage had kind of been prevalent, right? And hey, we're not going to check your income. We're not going to check your assets. As long as you got a heartbeat and a
Right.
credit score, like we'll give you 100% loan. Like, so buy as many homes as you can. Like it was a wild time. Again, we're not there, but can prices move negatively?
Yeah.
I want to say potentially so. Yeah, potentially
Yeah.
so. And
Yeah,
go ahead.
and so no, see, real quick, I just want to talk about this because this is the bottom line conclusion. By the way, this is from Keeping Current Matters, which a lot of agents use for like marketing stuff to say to clients. And so this is what we're referencing about, like the kind of recession doesn't mean negative things for real estate. That mortgage rates can go down. And again, I don't really want to focus on that too much. But the thing here, the bottom line says you don't need to fear what a recession means for the housing market. If we have a recession, experts say it will be a mild and short, and history shows it means mortgage rates go down. And I just think it's like, if you just unpack that, it's saying, well, okay, so should we root for a recession because that means prices go up? And it's like, no, I don't think anyone would say that. And so I think it's like, I think that trying to make this correlation between a recession and the real estate market is not a necessary correlation to make. Like, I just think you can look at other factors and other things to forget about the word recession and how that affects real estate. Think about the dynamic we're in right now, where we've got interest rates that are going to stay higher longer. where you've got a Fed who basically has admitted that we need to kill jobs, right? And that if you look at prices historically, right, like we're at a pretty steep rise recently, similar to a steep rise we saw before. So yes, the same conditions aren't necessarily going to be the conditions that affect any prices to go down now. But to say that just because those aren't there, something else can't, it's just not, I think it's not sound logic. But here's the thing. So like, if you look at the kind of a trajectory, you can see if you put a line from like the top of here 35 years ago and kind of put it at the baseline of like kind of the higher, when things started to kind of start their way up. And again, this is not scientific. I just drew a line here, so don't think this is great analysis went into this. I'm just trying to do a visual of this is the median price in July of each year for the last 35 years. You can just see that, maybe it got a little frothy at a few times here, and maybe it dipped into correct from that and then started coming back up. So, here is like a little bit of a dip till a climb, a little bit dip to a climb. So will it kind of here dip to a climb again? That would be kind of maybe a way of looking at it. Here's the recession years that are pointed out in that Keeping Current Matters article. So the 2020 recession really was caused sort of like by maybe the pandemic, and who knows what that, so maybe that's not really a real sort of recession. It's kind of an outlier, but you could just kind of see here in this recession was obviously when the prices had come down quite substantially. But anyhow, I just feel like I just don't see any data that says like, no worries, the price is just going to keep going near,
Right.
maybe, and again, they don't have to come crashing like this, but I just feel like, but anyhow, and here's a yield curve inversion that talks about recessions. So I think we don't have to make the argument for recession. I think everybody is now kind of admitted there's going to be some sort of recession, and soft landing is not necessarily going to happen, right? That's kind of an accepted truth now.
I hope so. I hope so. I hope so. I know it was harder to talk about it last year, or beginning of last year, but I think it's settled in the minds of all. The Fed came out with more comments this past week, and sent the markets kind of going. But what it did result in is interest rates going up, and potentially, interest rates going even further up. And I remember we just had this conversation this weekend with a client who was a little bit like what's going on here, right? I thought I heard that they weren't going to raise interest rates, this Thursday, and it was but they also seemed a lot more hawkish, right? The comments were very hawkish, that there needs to be pain, that this is not going to be a soft landing type of recession. And literally the rates went up, even though the Fed didn't raise rates. And that's how it goes. And we had to point out to the client, hey, there's some, it's not correlation on exactly the Fed raising interest rates, but what, the bond market is doing, what the market is doing in response to these comments. And as a result, the rates have gone up. And so we're in an environment now where the rates are almost high as it were at the peak last year. If not there already now. Today, the rates went up again. So I just think it's good to kind of be aware of that and not to like ignore that, right? But then to find ways to still provide value for clients and an opportunity for clients in this market.
Yeah. And I think that what's actionable about this is, here's the seller you might be talking to in a year from now, is somebody who has equity in their house, who has overextended themselves a little bit financially, and the bills are starting to get a little bit too much, and maybe they're worried about their job. Like they're worried that, there's been some layoffs at their company, and they're worried about that they can be susceptible to that as well. And they're a little bit panicked, and they decide, you know what? I don't like this stress. It's affecting my life. It's affecting my marriage, let's say. I don't want to feel like this. I'm not used to feeling like this. I've been very successful. Things have gone well for me. And now, maybe I'm looking at what I can do. I have equity in my house. Maybe I can't refinance it. I can't do a HELOC because then I'll just get some more debt and I can't get better rates. So what I should do is maybe just sell this, reset a little bit, pay off some of this debt, go rent and rental. Like if I find a great place to rent, and just kind of get back things together. And I'll be happy to buy another couple of years. But before things get bad, I might want to do that. And that's a very rational, good decision to make for someone to just reset that way. And you need to be able to have that conversation in a way that says, that might be a good decision. I totally get that. I know we've been talking about this, like make them feel like they're not in a bad spot for having to do that, and encourage that might be a good decision, right? And talk them through that. And then you might have the person who's going to buy that house. Let's say you're the buyer who's going to buy that house is a person who's like, hey, I have some money here. I've been saving. I've been worried about buying because it's been so bad. I can afford this type of house. I know I'm paying, it's whatever. And I can buy this and I can afford this. I'm not hoping the rates go down. I can actually, and I know that maybe rates will go down in some year in the future. And that's great. And I can recast this. And I know that maybe I'm getting this house at 10% less than I would have bought it 2 years ago, or 5% less, whatever it might be, not 30%, 20%, but maybe like 5% less. And it's a solid decision. And I have a family now. And, it's like, it makes sense for me personally to buy this house. I'm not timing the market. I'm not thinking I'm buying at the top or buying at the bottom. I'm ready to buy a house. I need a house. And it's a perfect transaction. You've got someone who's not feeling like they're fire selling their house and they're getting, underwater. They're actually getting some equity to make it. Those are perfectly good buyer seller scenarios in the next year. And there's nothing wrong with that. But again, it's like, if we're not ready for that kind of conversation, or we're not, looking to have those conversations with people and talk about those options, then I think it's, and they see us saying something that's tone deaf to what they're going through, then they're not going to want to call you. If they want to talk to a consultant, someone they feel they can trust and listen to them and give them best advice. They don't want to talk to a salesperson at that point. They want to talk to someone they really can trust with guidance. In both cases.
100%. Maybe we could talk about institutional investors in SFR.
Sure.
Yeah, that. So I think most people have heard this by now, but big companies like BlackRock, big institutional investment firms that have, I don't know, like $1 trillion under management these days, had for the last few years been buying up single family homes, and snatching them off the market in handfuls, right? I remember meeting someone at a commercial real estate kind of gathering that was representing Chase in buying
I remember that.
homes, and they had a mandate to go buy $1 billion, right? Just like that, right? And this was like a year ago or so, Matt, right? We were at that thing. And so now a Wall Street Journal article came out, and it basically highlighted that some of these institutional investors now are unloading some of those properties, right? And thinking of selling chunks of them, and in some smaller, kind of investment houses, selling them all, right? They had made some equity gains, and now the cash flow against what they have locked in there as equity is like a 3 or 4% return. Let's say a 6-month T-bill is, yielding 5.6, right? So why would I keep this real estate investment that takes some management, has some risk to it, got to deal with tenants and all that? Why would I do that? Why wouldn't I just liquefy all that and go into a T-bill, right? It's kind of the new thought, and they're not wrong, right? And so, what does this mean? Like, how should we be interpreting this? What does it mean now that the institutional investors are starting to do this?
Yeah, and not to take off from this, but we'll come back. But I was at a birthday party yesterday for family, and people were comparing different interest rate options they had. Like, I've got this interest rate, I've got this CD for this long, it wasn't crypto talk anymore. It was like all these, like, I got this CD over here, I got this. It was all about, safe kind of investments that everybody's comparing and competing with. Like, I've got 5.5% over here, I've got 4, So I think that's the thing, is like the alternative to somebody that putting money into something now might be going away from, hey, buying investment property, to, hey, let's go into a safer vehicle. And real estate over the long term was always, you could argue historically it's safe because over time it will go up. Like we saw the chart, it's going to go up over time. But still, you're still having to deal with property management and stuff like that. So for the time being, if I can get 5.5% here versus a 5% cap rate over here, and I have to deal with like tenants and all that, then maybe it's just better to go over here, right? So definitely. So it's interesting to see what that's going to mean for the market, because a lot of people are thinking it's bad news that these institutional investors were buying everything up because they knew that it would affect, the average homeowner from being able to get in on the market, right? And So they were also buying up a lot of new home inventory, right? Some from builders directly, because I think that's what actually. It wasn't like a lot of us agents were being approached by BlackRock to buy a house. Like I bet none of you had an offer from BlackRock like on a house, right? They were buying it through other ways, I think, right? It was probably through new home builders, and also markets that weren't necessarily California too, maybe. But
Right.
but
Yeah. On a side note there, CDs and like savings accounts that yield the pretty high interest, all the bank is doing is arbitraging, right? They're taking your money, and then buying a bill or buying a bond, right? And so
right,
let's say they're offering you 5% on a CD, they're buying a 3-month treasury bill that's yielding 5.5 or 5.6, right? And they're just making that little difference. And so if you ever wanted direct access to like buying a T-bill or whatnot, and getting the maximum like basis points on it, there's a website, I think it's called treasurydirect.gov, right? And you can see there like what is advertised. You could buy T-bills and stuff like that through your financial advisor, of course. But if you were a little bit more savvy and wanted to take a look at the raw returns, I think they're all posted there. And you can like fund an account to buy those things. They're direct versus go through your bank. Yeah, but that's all it is. It's the banks will always find a way to arbitrage. Investors who are buying single family residences, they don't do it because they're really passionate about real estate or something like that. They're looking for a very safe return. And then now what they're saying is, hey, there's better returns that are safer, in just buying these bills or buying these like basically guaranteed money type of investments, right?
right.
So let's let go of the things that are a little bit riskier and kind of harbor ourselves in these type of things. And it's not a bad strategy, I think, given where the rates are and where they seem to be heading still.
Right.
So yeah.
And I think some agents might not see that, like if I go to buy a house and I finance it and I can break even or even make a couple $100 a month, but someone else is going to pay my mortgage off theoretically for 30 years, then that's different than if I have the $800,000 in cash to buy that and I'm just parking that cash there and making that return, right? That's a different consideration. These companies aren't looking for the long term to build like that. They're looking for returns consistently, and so they need to look in what's the best use of my money right now, not what's going to pay off in 30 years. They do think long term at times, but I think that a lot of times, especially at times like right now, they're resetting their thinking and they're looking at what's the best thing to do right now. And knowing there might be opportunities to redeploy that cash in the real estate sector if the prices go down a little bit too, if they need to. They have those options as well.
Right.
So,
right.
yeah, but
yeah, it's kind of weird that there's a new marker that 5% or savings account. I think they're offering in the 4s right now, T-bills like mid 5s, right? That is the safe bet, and those returns are really good, right? I think even a couple of years ago, like a savings account yielded you 0.0
right.
something or whatever it was, right?
It was nothing.
Really,
Yeah.
It was not very attractive. So it's kind of interesting to look at that. And then, we talked about this. There was like a very like lucrative investment that dealt with like foreign exchange or like foreign currencies, and it was yielding what looked like an 18% return with high liquidity. You can liquefy your funds within like 5 days and things like that. And I've personally been hesitant, not because the fund isn't great or the investment isn't real, but whenever something sounds too good to be true, chances are it might be, right? So there's that little gut feeling in me too, but also the risk there for some of these higher yield investments is counterparty risk, right? Let's say you buy a Forex contract here and you're hedging yourself here, and you're really making like a little spread between the two contracts, but also this is all dependent on the contracts being settled and for that cash to be returned, right? The way the contract spells out. I'm a little weary, to be honest, because we've now lived through 2008 where counterparties, when it came to like credit default swaps or these type of like MBS tied like investments or contracts or insurances, like they didn't pay out, right? The guy who made that big bet.
And so just to explain to what counterparty means to them, it's basically the person taking your bet, right?
This person taking your
It's
bet. So even
like
Michael Blurry, right? He
yeah,
bet and shorted everything, and he was completely right. But it took him years and years and years. He got paid some of what the contract should
right,
have paid, because these people couldn't pay up, right? These banks went belly up, right? Some of them
right.
weren't in business anymore, right? So counterparty risk in an environment like that is real, and so for that reason,
Yeah,
been a little hesitant, right? Um,
yeah,
yeah, again, I hope we don't get into a situation that's like that, but there is a piece of me that still is like, having lived through that, we might be in that environment again. I would hate to see that happen again.
yeah, yeah. And I think that, I mean, I think there's no impending immediate thing that any of us we're talking about these things right now because there's other people are talking about these things right now. I don't think you or I think these are the things that our agents should be thinking about constantly right now. I think that it's like, let's talk about this while everybody's talking about it. Give a tone of, we know that the markets, you know, like could be affected by a lot of different macro variables right now, the real estate market, the stock market, things like that. And what we just want to make sure is people aren't giving like the wrong advice based on just the environment us as realtors have been in is just this really strong up only, this ridiculous demand side with ridiculously low supply side. And we're like, we can't almost fathom a world different than that right now because that's what we just been in. And the narrative has just been so easy to say low supply, a lot of demand, rates are great. And then now all of a sudden, okay, low supply, rates are not great, but still such low supply that it's kind of like almost the same type of demand supply. But it's like things can change quickly or even slowly, but you just have to not be caught off guard. We don't want anybody to be caught off guard is what I think you and I don't want. And I think that and or to be dismissive of headlines because we feel like we know better. Like we hear some like, well, we see CNN talking about the housing market. We're like, oh, they don't know. We know we're in this. But sometimes they're seeing macro stuff and talking to people who are pretty sophisticated, who surprisingly know just as much as us, other than maybe some of the nuance of selling houses. They still know pretty much about supply side, demand side in the real estate housing market, and maybe sometimes even better than us because that's what they study only. So I think we just have to like not be dismissive and say, we're going to wait and see here. But what we don't want to do is give advice to people like, hey, rates are going to come down soon, just buy the house, or say, hey, prices are going to continue to go up the next couple of years. So even if you're thinking you might, have to sell in a year, still buy it. It's like, no, maybe you don't. Maybe it's not. It's okay to sit on the sidelines sometimes, Yeah.
Right.
And then,
Right. And I
and then
imagine that $4 million sales mark that we keep talking about, it's made up of people who have to sell, have to buy, right? And
yeah,
that's an okay thing. That's something healthy to focus on. A lot of people who were spec investing, or again, I don't want to knock Airbnb, but wanting to snatch up as many Airbnbs as possible because they figured out kind of a property management system or whatever. Some of that froth, I think, is going to be challenged a little bit, but should people stop buying because they need a house? No, absolutely not. Right.
yeah.
Um,
Yeah, and
yeah, it's
Airbnb
just
is in a scramble right now to try to really change their business model up, right? Because people are complaining about the cleaning fees really offsetting the cost of the actual daily rate. So now they've had to combine that. A lot of people are saying they've lost that touch of like the host is someone that's a person rather than like an institution, right? Like we like the
right.
fact that we're like helping someone else in almost a gig economy. Like this person's like, we're taking their cabin, they're cool people. They left a nice little note for us, and it's like they really, they're sharing. It was a nicer kind of, that was like some of the sentiment I think of the sort of the
Right.
what do you call it, the kind of trend. Anyway, so the point is there is some scramble going on there, and I think there's some pushback as far as from people wanting to, let's go to a hotel. I don't have to clean my own sheets. I don't have to gather all the trash and put it over by this one garage area. It's like they don't have to do all that, right? So there's like pushback and there's some shifting. I think Airbnb is going to be okay, but I think they're going through some shifting right now too with their model.
Totally.
Yeah.
Totally. Yeah.
But,
So someone who's saying, hey, I have one bullet to fire, I want to buy Airbnb here or there. Like, again, I don't know. I don't want to put words in anyone's mouth, but I wonder if there should be a balanced thought on that, really, and yeah.
Yeah, no, absolutely. Yeah. Do we have any, we had some questions, any questions to answer here? We're gonna,
You know what?
yeah.
I don't know if we do, but also, man, it's been an hour. So it
Yeah,
went
so
pretty
you're right.
quickly.
Maybe we can wrap up anyhow. Yeah.
Yeah, but do please put questions there. We we're always trying to form what to talk about based on what's happening in the market or some news articles that have been coming up, and then just what's also on Matt and my mind, right? So would love to hear feedback from you guys on what maybe you'd like us to cover and whatnot. We'd love to tackle those and give some thought to it. And then maybe the last thing I can say, maybe you bring it home for us, Matt, but it's really, hey, have a balanced approach, a balanced mindset here. Let's try to be less salespeople and more sophisticated advisors in that sense. I think we use this pretty recently. I forgot in what context, Matt, but the idea of commission breath. That let's take care of our commission breath if we have it, and maybe grow an awareness to ourselves and where we have that commission breath and what's driving that for us, and really kind of do some work to unpack that a little bit. And be advisors in that way, kind of unpeeling all those things and not listening to just the sensational headlines and trying to use that as a new sales mechanism, right? But to really be balanced people in this market.
Yeah, absolutely. And that's exactly what, is that we're not saying there's no opportunity out there. There's no investment opportunity. We're just saying don't make sure that we look at it like, hey, let's be open to this. What could be happening right now, and be open to all ideas, and to really filter those through what we do know, but not to just have this one kind of viewpoint of, up only type of mentality of things are just going to go there. Because I think there's going to be great investment opportunities. We're going to be looking to invest in opportunities that are out there in real estate. And I do think that I will still advise a lot of buyers that they should buy if based on what they're telling me, that sounds like a great plan. I'm going to tell a lot of sellers they should sell based on what they're telling me, and it sounds like a great plan, based on what they're going on internally. Because it's not just people that have to buy or have to sell, but you're right. That's the 4 million, but there's also people that just, I want to, and I can, and it makes sense, or, and that's okay too. Right. But there's a lot, but we don't want to tell people they should based on the market. Like, you should get in now, or you should sell now. That's when it's always dangerous, when you tell people they should buy or sell based on just the market itself, because you could be wrong.
Right. Maybe I could wrap with this, Matt, because we've been talking about the REIF for a long time, the real estate investment fund that we want to do at Circa. And though we've been trying to navigate this market and really understand what might be the right opportunities for us to get in, we're pretty close to, I think, narrowing it down to a few different little opportunities. And one of those things is to create a little fund that would lend money for light renovations, for homes that need it, that we can add value to. So we will have more details on that soon. And again, if you're interested, and if you haven't reached out to us about that already, please do, and let us know that you're interested. I think over this winter season, we'll be kind of firing off our first few deals and getting some return on those. And so there are about 2 or 3 on my desk right now that we're looking to just fund and generate some income on. And what's different about this, and why we're taking such kind of a very methodical approach to this, and a very non-hurried approach to this, is we don't want to be wrong, right? We want to make sure that the fund yields a return to the investors, that it isn't something we're way out ahead of on the market and then we get burned by that. We're doing something that is a little bit more prudent, a lot more stable, and has less risk involved in it. So that's kind of where we're at, but it should be rolling out. In fact, again, these 2 deals on our desk are something that Matt and I may just fund ourselves to get the ball rolling, just to make sure we're kind of leading in that way, and we're not asking people to jump into that. Right. And seeing some return and some performance on it, so that we can invite you to jump in on that. And but we're there. I think we're there. And, we have kind of the matrix in what we're going to do. And so if you're interested, please reach out to us.
Yeah, absolutely. Yeah. So we see some people here have some interest. Yeah, absolutely. So, all right, well, I guess we'll wrap up for today, but we'll be back at it in a few weeks. And everybody have a great rest of your week. We'll see you soon.
Sounds good. Have a good week.